Okay, welcome to this YouTube channel, guys. Welcome back. So today I'm going to be doing just a small brief explanation on how I understand the ICT macros and how I actually trade them. So this is our daily chart on the US 100, and I'm sure we all notice how the US 100, US 500 and the US 30 have been pushing to the upside, creating all-time highs. And this is when we've seen some significant retracements back into the range, and that's what's happening right now. So you can see how this all-time high was formed at 180.42.1. That's our highest high. Then we had another swing high to the right of it that just fell short of it, failed to take it out, and we started some sort of retracement within this dealing range from this high, from this low, to this high. Yeah, so what I feel is maybe we're getting into discounts, take out this short-term source of liquidity, and maybe we can see some sort of reaction moving to the upside. Otherwise, we can have a decline to this order block and maybe potentially taking out this sell side liquidity. Yeah, but I'm favoring the upside more than the downside on a higher time frame. So I'm just going to take it down into an hourly chart and just see what I had framed. Okay, so this is the hourly chart that we have, and this sell side liquidity that I have noted here is the daily swing low that I just showed you guys, that has been taken on the daily time frame, in which I framed as sell side liquidity. Yeah, so this is what I was looking for at the start of the session today. So if you look at this candle here, that's our 9 a.m. candle, and you can see how it left behind this week. And I'm pretty certain this week happened at 9:30, and that's at the equities open. And you can also notice that we're trading into this bearish fair value gap that we have down there. So let me just highlight that. Yeah, so you can see before the session starts, we sort of consolidated, had a run higher, bumping into the high of that fair value gap. We had a reaction going to the downside, and at 9:30 equities open, we had a Judas swing that happened right at 9:30, and it just fell short of that high that formed in that fair value gap, and we started seeing price pushing down and going lower, hunting for that sell side liquidity. And what I was looking for today is that not only for this short-term low to be swept, but also to be traded through it. So that's why I didn't trust this 10 a.m. candle to be the end of the sell side liquidity take. I was expecting a move deeper into that sell side liquidity, as I expect the price to reject the sell side liquidity by tomorrow, but that will be after we've seen a significant move deeper into the sell side liquidity. So I'm just going to take you into the 1 minute chart and see what I had framed for the macro. Okay, so we're down into the 1 minute chart, and what we're trying to look for and what we're trying to trade is a silver bullet right after the opening range. The opening range, which is from 9:30 equities open until the start of the silver bullet 10 a.m. So within this time window, which is the opening range, we're not looking for any trades. We're trying to observe what really is going to happen. Yeah, so trading within this time window is dubbed gambling by the ICT. Yeah, so you can notice how at the equities open we had this short-term high being run right at the equities open, you can see how this round starts taking out that buy side liquidity and trading up into that hourly fair value gap that I highlighted, and you can see how the bodies of the candles like close right within the fair value gap and it starts dropping. You can see how we had a return into that fair value gap right in there. That's a balanced price range. You had this buy side imbalance and had this sell side imbalance. So that's a balanced price range. It trades back to that and it starts its run down into that sell side liquidity that I had highlighted on the hourly chart. So please just have it in mind that this line that we have here is the sell side liquidity for the low that I showed on the daily chart and also on the hourly chart. Yeah, so as we traded down, we left this fair value gap in here, which I had my attention to. Yeah, it's not really in a premium. Yeah, if we're measuring from high to low, you'll notice that this fair value gap doesn't really lie in the premium price, and that's what we'll be looking for. Yeah, but considering that we're heavily bearish on this, I think trading back to fair value gap is fair and acceptable for price to start moving away from that complete objective that we have. Yeah, so into the silver bullet window from 10 a.m. to 11 a.m. we had some sort of consolidation. We had a slow run to the downside, which this was seen as a trend going to the downside. And during the macro, and this is what I think about macros, I actually think about macros as the algorithm starting to spool for liquidity before it continues or reverses for the actual move and complete its objective. Yeah, so what I really want to notice during the macro is a run, some sort of Judas run. Yeah, like some sort of run that starts between that window and like takes out some short-term highs and maybe like trades back to an inefficiency or an order block. It could be any PDRA. Yeah, so like in this particular case, you can see how at 11:50 we start a run to the upside, taking out these trend line chronicles that we have here, and also trading up into the lower end of this fair value gap that we have on the 1 minute chart. And I was paying my attention right to that, and we left in this buy side inefficiency, buy side imbalance or side inefficiency, and I was observing to see how price will treat this particular fair value gap. Yeah, so, and I had my focus to this sell side liquidity that we had left on that candle on the hourly chart. So I'm just going to show my executions on this. My laptop is super slow. I don't think I'm logged in. Yeah, so I was actually trading on my paper trading account because I haven't been trading on my accounts that I have with Funding Pips. Just recently got funded with Funding Pips and I have been trading with them for like 2 months to 3 months now, but then trading was disabled for like 4 days and we're just waiting to get back online. Yeah, so this is a paper trading account that I haven't really looked at or traded for a very long time. So these are the executions that I had. These are the executions that I had on this account. Yeah, so you can see how sure you see the little arrow down there. That's why I put my first position on. I was considering this up close candle. It held as an order block, and when I traded back into it, I was going short right there. That was 2 contracts on. I had my stop at the high of this inversion fair value gap, and the next contract, make 3 contracts, came in. You can see the arrow down there, right at the low of the inversion fair value gap. My stop was still at the high, so you can see how it traded away from that, took out a short-term low, traded back to inversion fair value gap, the lower end. You're not really running that high that first traded to the inversion fair value gap, and you can see how it breaks away, leaves this imbalance in there. Why not this imbalance? I was considering this imbalance because it lied in a premium price with respect to this high and this low. Yeah, so it traded down there. Once it reached this price point, I showed my stop loss to break even. I was break even right at that price, so my stop was slightly above this fair value gap, right at the high of it. And as it traded back into that, I was aiming to take my first contract off right at this sell side liquidity, and you can see on this candle right at the sell side liquidity, I was buying 1 contract off, and then it traded into this inefficiency down here. That's a buy side imbalance, sell side inefficiency. So I was also focusing on that for price targeting. Okay, so the next contract came off at the low of this buy side inefficiency that we had right there. I was buying 1 contract off, and the remaining contract was left to run for the sell side liquidity. And you can see how I close it like right before the sell side liquidity, or after it priced it and it retraced back into it. I clicked the button, but I think it got slipped. Yeah, but that doesn't really matter. What matters is that we had the full position off right at the target, and it delivered to the tick. Yeah, so this is how I understand the macros and how I try to use them to be profitable. Yeah, I hope you found this insightful. See you in the next one.